or the NIMS pressure because of high deposit rates that all the banks are chasing is a little bit more severe than the market was expecting. So we'll have to see what the results in the commentary is. But there's something under. Is either something I'm missing, or there's a bit more pressure on the margins than we were hoping for from the last set of results. But that would be the catalyst for the banking sector to outperform, as if that pressure on margins is not as severe. So similar to the IT sector, if we start to see the results are okay, I think the banking sector will take the next lead of the market higher.
All right, and since we are at a very crucial juncture in India at the moment, there is a clarion call to invest in India, especially on the back of the fact that firstly, budget is around the corner. This is an election year. Let me first pick your brains on budget, Andrew. What are your big expectations? It is an interim budget, so obviously, we're not going to wait with our bated breaths as to what sort of announcements are going to come in. Many are saying you may call it interim, but it's actually the final budget because the government is very sure it's going to come back. The ruling government will come back. Now, investors have been told by the ruling government, don't worry, we're going to come back, keep investing in India. But for budget specifically, what are your top picks for what's going to happen in the budget? What are your expectations from the government at this point?
Again, I think it's more of the same. I mean, I wouldn't want them to kind of do anything more radical than they have been doing, because government expenditure across broad range of sectors, they kind of move towards helping electronic manufacturing sector, I think will continue. So, these kind of schemes, I think all bode well for bringing in foreign direct investment, as well as obviously investment from our own companies in India. So I think if they just continue along this path, that would be great. The one thing that I keep hearing more and more is maybe something towards capital gains tax on stocks. They had if you remember last time, they did something on the bond side. So that's something that we have to kind of be aware of if they're looking at trying to not equalize the tax, but at least getting the tax kind of differentials a little less than they were.
All right, and I'm assuming that with this being an interim budget just prior to elections, I believe capital gains tax may not be happening just this time around. Perhaps it's going to be a wait and watch on that one. But before I let you go, as I mentioned, election year, how are you and what are your suggestions to investors at this point in time? What should their portfolio be like prior to elections and post-elections?
And also, if I could jump in over here, if BJP loses, what sort of a correction can we expect at the stock markets?
We've had that, let me think, wasn't that surprise back in 2004 when they lost the elections? Didn't the market fall quite significantly then? What I would say was that if that was the case, then between 2004 and 2008, you had one of the best bull markets for a very long time. So I don't think whoever gets in would change the policies or direction of the economy that quickly. And I think all the great work that's been doing in terms of government expenditure, I think will continue to help the economy grow at that kind of 6 to 6.5%, at least for the next few years, and then accelerate from there on. So, I would look at it, any kind of opportunity of the market falling because of whatever reasons, political, would be an opportunity, to buy into the long-term stories of India.
Okay, an opportunity this way or that way. It will be an opportunity when it comes to Indian markets. Andrew Holland, thank you very, very much, sir, for joining us here on Newsline. Always a pleasure listening to you. And with that, it's time for
Thank you very much for the opportunity.
Thank you. And with that, it's time for a short, quick break. We'll be back on the other side.
Since the last 2 years, Khalistani terror groups are threatening Indian diplomats in Canada, US, UK and Australia. Investigations of these threats led us to the first ever abduction and killing of an Indian diplomat, Ravindra Matre, in UK's Birmingham in 1984. Our months-long investigation finally led us to the murderer of Ravindra Matre, who has been hiding in Pakistan-occupied Kashmir for the last 40 years. Watch our exclusive documentary, Murder of an Indian Diplomat, where we reveal the man who killed Ravindra Matre.
Stop searching, start streaming. Download the world's first news OTT, News 9 Plus, ahead of the curve.
Why is the state not looking at putting an embargo on that?
And the state has not been able to handle that part of its own responsibilities.
It's not the fiefdom of politicians. They owe it to the people.
Everybody is as good a citizen as we.
As a Telangana person, I will not accept his leadership.
What was worrying was the stories that were coming from the Congress that there was internal sabotage.
You can't straight away give 12%. There is no provision.
Exactly.
You need to do a lot of other things.
Yeah, just because they are tribal, everyone does it.
Wait.
That's my problem. How do ordinary folks deal with this? Think about it.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
Welcome back. The big story we're tracking at this hour comes on the back of edtech giant BYJU'S valuation tanking by as much as 95%. From once valued at $22 billion, the company is currently valued at just over $1 billion. What has led to a massive dip in valuations, and what is impacting the company at the moment? Since we keep talking about it, Karthik Malhotra here with me in the studio.
Hi,
Karthik, hi. Good morning. BYJU'S is a story in unmaking. There's stories in making, and then BYJU'S is an unmaking because of a company that ballooned in its valuation, in asset size, and in popularity. Once became a trademark company for every other startup to emulate, is now literally finding it difficult to sustain, if I may say so.
Yeah, I think the troubles for BYJU'S have been around for a while now, Shweta, and everybody has seen what has happened in all of 2023. In fact, even starting October 2022 onwards, we've seen this little correction in the valuation of BYJU'S. Now, we saw all of 2023, investors like Prosus had done multiple rounds of cutting valuation of BYJU'S. Like you said, once valued at over $22 billion, it had come down to about a $3 billion mark by end of 2023. And within the first 11-12 days of 2024, we've seen now the valuation, even from those very, very reduced $3 billion, is down to a third of that, to about $1 billion. Why has all this happened? I think all that has happened because finally investors are beginning to realize that there is a very, very less likelihood of BYJU'S coming back into the green, coming back into a business which is profitable on unit economics and a business which can continue to scale at a rate at which it scaled up until 2022. When the pandemic was still pretty much real and present.
And so there's very little value in BYJU'S at the moment. We're still awaiting the financial results for 2023. We don't know how they are. But as far as financial results for 2022 is concerned, they were not very, very bad at the moment. What are the current challenges in front of BYJU'S? What should BYJU'S or Baiju Ravindran be mitigating? I know he's listed out his priorities list as to what the company should be looking at, a course correction perhaps this year.
So I think there are a lot of issues that BYJU'S is dealing with right now. The first and foremost among those is the FEMA violation charges against the company, and that, according to a meeting held by Baiju Ravindran and AGM held in the first week of December, that was number one on his priority list, that those FEMA charges, which he's in denial of, need to go away one way or another. So I think that is something that he's taking personally, and that is something that he is really, really keen to fight as the first battle to, at least if nothing else, clear his name, his company's name off the corporate governance, the top of the corporate governance issues list. So FEMA violation charges is number one. Number two is the $1.2 billion term loan B, which there doesn't seem to be a roadmap to repay, because the sale of Epic and Great Learning, two assets bought from companies running those in the United States at the peak of work from home, study from home 2021, 2022, have not, that gamble, that investment has not paid off. So getting those monkeys off his back is the second biggest priority for Baiju Ravindran, and some sort of repayment of that $1.2 billion term loan B. The third important problem right now, of course, is, which actually is number 5 on his list, but actually, okay, so let's talk about his own priority order first. Number 3 on his list is the audited statements of FY23, which have been elusive for what, almost 8-9 months now. I mean, they should have been reported back in July. The deadline, extended deadline, was July 2023. We haven't seen those results come out. So that is number 3 on his bucket list, so to speak, right now when it comes to saving his company. And I think the most critical among all this is there growth? Is there a business model? Is there a path to profitability? That is actually the last on the priority list for Baiju Ravindran. But I think for investors, that is obviously among the top most items on agenda. If there is no path to profitability, if there isn't a business model, even the folks, the well-wishers of Baiju Ravindran, folks like Ranjan Pai, etc., are going to walk only a little bit of distance. Beyond that, people will want to withdraw and will want to withdraw the life support that Baiju Ravindran is on right now and withdraw their investments into the company. So overall, I think global organizations like Croesus, like BlackRock, etc., which have been early investors in the company, are now not very sure of whether their investments will ever pay off. So on their own books, they are slashing the valuation. It's not that this valuation is on the basis of which Baiju Ravindran has raised fresh funding. This is basically the quality asset size on the books of investors like Croesus and BlackRock, which is now getting downgraded. So their investments, which at one point would have fetched them at a valuation of $22 billion, is now going to fetch them returns at a valuation of $1 billion, which obviously is 95% down, and terribly bad news for Baiju Ravindran.
Terribly bad news for Baiju Ravindran. As of this morning, the company's valuation has been slashed by, as I mentioned, 95%. Baiju Ravindran has a laundry list of actions that he needs to take, and needs to take now, in order to clear his name and the company's name of the charges that the company is currently dealing with. But shifting focus to another very interesting story that is coming in by the way of bank deposits in the country, it appears that people's trust in banks is at an all-time high, and in fact growing annually at a compound interest rate of 9.5%. That according to the bank deposits figures as of 2023, which are currently touching about 200 lakh crore rupees from 100 lakh crore rupees in September of 2016. So from 2016 to 2023, doubling of that amount, what does it really mean?
It means a lot of things, Shweta. I think number one, it means early this year we were celebrating the AUM of mutual funds at 50 lakh crore rupees, and we were saying, whoa, wow, you know, this is a big number. Compare this to bank deposits at 200 lakh crore rupees, we are talking about a 4x.
Number.
We are talking about a 4x quantum of bank deposits versus mutual funds. And mutual fund investments see investments like from across the board, not just retail investors or retail savers, but even institutional savers, global folks, etc. Everybody takes part in the mutual fund growth story, and that at 50 lakh crore rupees was like, you know, the biggest headline. But bank deposits at 200 lakh crores is 4 times that.
Absolutely.
So I think what it basically tells you is that people who want to park their money are still a little more sure and a little more confident of the banking ecosystem and a little more risk averse. So I think this whole concept of financialization of savings, which everybody was talking about and the world was very bullish about in the year 2020, 2021, and that really saw the momentum in Indian markets, the retail investor participation in Indian markets did tell a story of its own, but only to a point where I think people do not want to shy away from fixed deposits. Now, if you look at the year 2023 alone, the deposits, the AUM of fresh deposits that came into banks was at about 12.6 lakh crore rupees. Compare this to the additional AUM for mutual funds at 1.2 lakh crore rupees. It means that in the year 2023 alone, bank deposits saw 10x more growth than mutual funds.
Right.
I think some of this is also to do with the fact that markets in 2023 had been a little volatile. We didn't see the IT sector firing, we didn't see the blue chips and the large indices like Nifty 50, Sensex, etc. give the kind of obvious returns that that they did give in the pandemic struck 2020, 2021, 2022. And the small cap rally, which in any case is seen as volatile and not suggested by most investment advisors, made some retail investors perhaps shy away from this whole mutual fund game, or if not shy away, not participate in as much measure, because we also saw that 2022 is when inflation started hitting and bank interest rates started going up. So there was a surety of a 7%, 7.5% return if you parked your money in banks in 2023. As opposed to a volatile scenario where you may get upwards of 10%, 12%, but nobody knew the downside given that there were 2 wars on in 2023. So I think 2023, the story was more to do with high interest rates and surety of income. But overall, 2016 onwards, bank deposits doubling. From the year 1997, I think bank deposits were just at about 5 lakh crore rupees or so. It's gone up 20 times in the last 25 odd years. So overall, I think bank deposits, fixed deposits are something that Indians are very, very heavily invested in emotionally and financially.
You know, let's also take a minute to understand the growth trajectory of the mutual fund industry. At 50 lakh crore rupees at the moment, it added 10 lakh crore only in the year 2023, which is a massive addition. If you were to extrapolate that number over the next 4 or 5 years, would it ever match up? Would people be investing perhaps equally, depositing as much money in banks as they're investing in mutual funds? It does look like there is more and renewed interest towards mutual funds.
I mean, I think a lot depends on what is going to happen in the world in the next 5 years, Shweta. So, you know, we can't really sit here and crystal ball gaze right now. But if we were to do that, if we were compelled to do that, I think let's look at the drivers which are going to influence the decision towards bank deposits or markets. So, I think the number one scenario would be that if interest rates continue to be high and RBI or central banks across the world are unable to cut rates, then banks are going to give short returns, which is going to ensure that debt instruments are going to be more favorable because you don't know the kind of volatility which is going to hit equity. If wars continue, then that scenario is likely to happen for longer because supply chains are going to continue to be hit. Now, in the other case, if you see that that there is discretionary spending, companies are doing well, demand is going up, profitability is rising, possibility of a rate cut, then you will see people will want to participate into companies and their growth stories. And if that happens, markets are going to rally. So overall, I think, you know, it's difficult to look at past data and draw a very, very clear picture of what is going to happen in the future because investors, savers are fairly smart. They will see how the world is panning out for them and what is going to give them less risk, more return, if that is ever possible, and opt for an option which gives them that balance where there is some assured return or there is a less likelihood of money being lost and a greater chance of fixed money or sure money being made, and that is where they're going to park their savings stroke investments as we see them.
Okay, and you're talking about smart investors who are perhaps more financially literate, for people who still don't trust mutual funds as much.
Yeah.
I think there is a renewed interest towards mutual funds. There's a sense of trust building up from the data that we can see.
So I don't know, Shweta. I think, it's again, I think it's easy to sit in the studio and classify people as those who are more educated and understand markets better and those who are not. But I think the reality is that those who have the money have the education, and those who have the education are perhaps fairly self-aware and aware of their financial whereabouts, and are taking very calculated decisions. Those who don't have the education, to my limited understanding,
small savers, people who still invest in post banks,
perhaps don't have enough money.
RDs, FDs.
They don't have enough money to put at risk.
Okay.
So I think they will obviously continue to look at RDs and FDs and post office deposits, because A, they understand those products better, and B, they don't have enough money to put at risk. So if they had the money, then the education would obviously have followed.
Okay, very interesting dichotomy there playing out as far as bank deposits and mutual funds industries is concerned. But before we let you go, a very interesting story emerging with Mukesh Ambani now re-entering the $100 billion club. He is one of the most wealthy people in the world, and he's re-entered that club with Reliance's stocks moving up in an upward trajectory as of yesterday. What does it really mean for Mukesh Ambani? I believe just about a couple
I think
of
it means another headline. It means another headline for Mukesh Ambani. He gets
about
many
$2
in any case.
billion more in his portfolio,
Yeah, so
but he's still one of the 10 richest
him into
people.
That, not 10, in fact, he stands at number 11 right now. There are a total of 12 people who command a wealth of over $100 billion. Mukesh Ambani has inched up to the number 11 position, and this of course has happened because of the rally we saw in Reliance stocks yesterday. In fact, it had hit a new high of 2,600 after the demerger of JFS. So Reliance Industries standalone hit the 2,600 rupee mark, and it re-enters Mukesh Ambani into that richy rich list of only 12 people who command a wealth of $100 billion or more. Number 1 on that list is Elon Musk with a wealth of $240 billion. And next up, you've got the likes of Mark Zuckerberg, Jeff Bezos, etc. But Mukesh Ambani at number 11 still continues to be not just the richest Indian but also the richest Asian. And second to him on the India list
is Gautam Adani.
Is Gautam Adani, no surprises.
No surprises at
Though
all.
globally, Gautam Adani now, as of the valuation calculated yesterday, still stands at number 16. So, I mean, compared to Mukesh Ambani, he's not that rich. He's still 5 points behind him, but or 5 ranks behind him, but the second richest Indian. And yeah, that's the list, I think. But again, let's not read too much into the list. A lot of this is completely dependent on how the stocks have performed on a particular day. So, it could very well, if we see another rally in Indian markets, if we see another rally in Reliance stocks, he will very well enter the 10 richest, 8 richest, 7 richest people across the world. But if markets were to ill perform, and if the valuation of the stocks they hold or the companies they lead was to tank, then we've seen what happened with Gautam Adani all of last year. How the fall from grace after a simple report by Hindenburg, not a simple, in fact a fairly complex and scathing report by Hindenburg Research, had actually made his own net worth tank.
Absolutely.
And though he's made a solid recovery after that, but the point is, I mean, this is all market dependent, daily dependent data. But yeah, good news for Mukesh Ambani, at least stands back in that list of $100 billion or more.
Adding over $2.8 billion on the back of RIL stocks doing extremely well as of yesterday. Remember, Ambani family owns about 43% of the Reliance group, and of course, any sort of momentum there in the markets and with Ambani and the Reliance companies will have an impact on the net worth of Mukesh Ambani. But with that, we're going to leave it at it. Thank you very much for watching.